Hey everyone, are you looking for a home and seeing some listings that actually have the verbiage assumable loan? Do you know what that means? Let's take a little bit of time, let's break it down and explain what it actually means to you, the buyer. Assumable loans typically are a VA loan, although there are others like FHA which are assumable, sometimes conventional and USDA. It just depends on the situation. That's something you have to check the notes and all the information from the actual lender that's holding it. But let's talk about VA loans and being assumable, because that's what you see 99% of the time. What this means is that if you have a loan that is at 2.5 or 3% and you are trying to sell your house, a buyer can actually assume the mortgage you have now. They will take over the current interest rate, and which is very popular when rates last year topped 7%. Now it's calmed down a little bit, but we're still getting calls and questions about it. So when they take over that loan, what it means is they're taking over the specific balance, terms, and the interest rate. So if you owe $200,000, but you had a lot of equity based on the last couple of years in the market and are selling it for $400,000, there's a $200,000 delta plus closing costs that need to be brought to the table by the buyer. Now, there are situations where you may be able to get a second mortgage, not to say you can't. There's not a lot of banks or options out there, possibly with the current servicer. That's something you have to actually take up with them. So the process is simple. We don't handle it. Banks, loan officers, any type of lender, we're not involved. You actually have to go to the servicing department that's holding the mortgage now, and they will walk you through the process. You actually apply for an assumption. Once you have a contract, then the paperwork's filled out and the buyer and seller both are approved by the bank. That is where they'll talk about a second mortgage and everything else. Once that goes through, the buyer actually comes to the table with the difference or in a second mortgage, which is very rare, but that is an option. The big thing to remember here is you, the seller. If you are looking to sell your house because you're moving, you're getting transferred, relocating, whatever it may be, and you want to sell quick, this is not exactly the process you want to go for. I'm talking to a lot of title companies around the area. Not a lot of them are even processing them. They haven't seen them, but the ones that have, none of which have closed, and they may have been in process for 6, 7, even 8 months before parties decided, you know what, we're not going to do this anymore. So keep that in mind. If you have the time and can wait, great. It is a process that really have no idea how long it's going to take. You may want to talk to your servicer about that. So even though this is a process that is available, capitalizes on super low rates at a time when rates are 4 and 5% higher, keep in mind that the equity that you want out of the property has to be either a second mortgage or cash from the buyer, and also the timeline to set proper expectations for a closing date. So hopefully this helps. If you guys have any questions, let us know. You can go to teamrickwood.com, send us a note, send us an email. We're happy to help you and answer any questions that we can. Hope you guys have a great day. We'll talk to you soon.